Hello and welcome to Asking for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's lots to keep track of, so we're focusing on what you need to know to get ahead of the curve, and here's some of the trends we're going to be diving into. Thursday saw stocks closing lower. Wall Street in the red again, with all major indices ending the day down. We're speaking with an expert on how retailers are strategizing for big wins this holiday season. What could this mean for your investments? And AI may help us learn more about the Earth through real-time imaging and analysis. We're talking with the CEO of Planet Labs to learn more. Well, consumers are already largely reporting an increase in spending over the past 3 months, according to a new KeyBanc consumer survey. And as the holiday season approaches, early holiday spending expectations are looking encouraging. Here with a closer look is KeyBanc Capital Markets Managing Director and Equity Research Analyst Brad Thomas. Brad, it's great to see you. So let's dive right into this. So start with financial confidence for respondents. Per your survey, Brad, this was interesting. Improving to the highest level since Q2 2021. A few questions there. When we talk about financial confidence, Brad, how are we defining that, and what explains that trend?
So that metric has to do with the outlook for the consumer, for their ability to spend and provide for themselves and their family. And it was really encouraging the data that we saw. We think that that's mostly tied to the stock market being near or at all-time highs at the time that this survey was conducted a few weeks ago, as well as optimism around the Fed rate cuts and benefits from the One Big Beautiful Bill. And it's important to remember, of course, that the top 10% of Americans account for about 50% of spending. So that wealth effect really hopefully ends up being a nice halo for us going into this holiday season in 2026.
And then, Brad, that's confidence. The spending was interesting, too. 47% indicating expectations to increase spending compared to the prior year. Explain that for us, Brad. What explains that trend? And I'm also curious, what are they intending to spend on? Is it what they want? Is it what they need? Is it a mix?
That's right. We were really encouraged with that result. 47% of our respondents in this quarterly survey that we've been doing going back to 2017 saying they expected to spend more this holiday season. That's the strongest number in 3 years and follows very favorable results on the question, did you increase your back to school spending, of which 44% said that they spent more this year. And that's usually a very important indicator of how holiday sales will be. So I think some nice momentum and some nice intentions to spend as we look forward to these all-important months of November and December, and to some extent October here with some of these early Black Friday sales kicking off. What are they spending on, you asked? We're seeing a little bit of improvement in some of the discretionary categories, the home-related categories, for example, consumer electronics, which had been weak over the last 3 to 4 years coming out of the pandemic. So that's a really encouraging secular trend that we think is underway, in addition to some of the more broad confidence we're seeing from the consumer right now.
There are concerns, Brad, as you know, about this cooling labor market. I'm curious to know, if it keeps cooling, Brad, what could that potentially mean for what we're talking about here, for consumer confidence and consumer spending?
It's a great question, and I want to be clear, there's no question there are a number of cross currents on the consumer right now, and a labor market that's a little bit softer is one of them. I think the good news is that the labor trends tend to be a bit more of a lagging indicator, and the leading indicators, such as the wealth effect, the monetary stimulus, the fiscal stimulus, we think that those point in the right direction and will underscore consumer confidence, going into this holiday season.
There are different kinds of consumers, of course, Brad, higher income, middle, lower. What were the differences your survey was picking up there?
There's certainly some bifurcation. When you cut the data, it's interesting. It was the age demographic of 30 to 44 that seemed to have 30 to 44 that seemed to have the greatest improvement in confidence over the last couple of quarters. And it shouldn't come as a surprise to us that those are folks that probably have more exposure to the stock market and some of the benefits of the One Big Beautiful Bill from a personal finance standpoint. As we look forward here, in terms of the demographics, there's also some challenges that are coming up at the low end of the market. No question, the inflation will nip away a little bit more at their spending power. They were probably under a little bit more pressure from some of the softer labor trends that we've seen of late. And where we're seeing that show up in our consumer survey is an increased likelihood to shop at the dollar stores. When we ask the question, which dollar stores have you shopped at? The likelihood to check those boxes has been going up for a couple of quarters now. And we think that bodes well for some of the trade down trends within the dollar store space.
So to add it up here for investors who are watching, Brad, to get to some names you all like, it looks like you prefer, I see Walmart, I see Ollie's, I see Lowe's. Are there common themes and threads among those picks, Brad?
There are, and thank you for asking. There's two sort of buckets that we like to think about our top ideas as falling in. The first is sort of the all-weather bucket, that are names that we think have company-specific tailwinds that are going to drive market share gains and an ability to perform in good consumer times and challenging consumer times. And we would put Walmart in that bucket. Ollie's Bargain Outlet, that's a closeout retailer that's benefiting from the pressure that's being put on many of the retailers that you're seeing go out of business. A lot of that leads to inventory at Ollie's, where the consumer can save money. And then we'd also name Casey's General Store to that group. Casey's is a convenience store, a gas station that has a wonderful pizza offering. And they've had a lot of innovation on the food side, growth in rural markets that we think positions them very well. Our second bucket is the more discretionary side of things, and it skews a bit more home related. And we're hopeful that this group benefits from stabilization, hopefully growth in housing and home related spending as we move into 2026. And our favorite names as we think about that side of our coverage list would be Somni Group. This used to be called Tempur Sealy, but they bought Mattress Firm. Now it's the ticker's SGI, Somni Group. Lowe's in the home improvement space that has a lower valuation than Home Depot is why we prefer it to Home Depot. And finally, Williams-Sonoma. Those would be the three that we think have the best exposure on the discretionary side of things, more so as we look out to 2026.
Brad, appreciate your time and those picks. Thank you.
Thank you.
Stick around. Much more Ask for a Trend still to come. Is AI attracting inflated expectations and investment, or is it smart foresight? My colleague Julie Hyman explores whether we're in the midst of an AI bubble.
In a research note out this week, Seaport Research Partners makes a call that the AI trade is indeed in the early days of a bubble driven by spending from 6 major companies: Amazon, Google, Meta, Microsoft, OpenAI, and Oracle. It comes as the tech sector has announced a wave of deals between some of these players. And joining me now to break down that call, Jay Goldberg, Seaport Research Partners Senior Analyst. Jay, it's good to see you. Thank you for being here. You say it's a bubble, but that's not necessarily a bad thing, or it's not necessarily imminent that the bubble is going to burst, I guess, is what you're trying to communicate.
That's right. I think we're in a bubble, but we're in early stages of the bubble, and you can still make a lot of money. Stocks can still go up a lot from here. But I think people just need to be aware that we're starting to get a little bit beyond the realms of rationality and into more sort of faith-based, belief-based investing.
Well, when you talk about those 6 companies that are so pivotal to this AI trade, of course, there's been a lot of concern that everything is riding on just a few players. And even among those players, OpenAI is unique, as you point out, in that it doesn't really have cash flow. The others do have good cash positions. But the other, we have the 6 up here, but maybe OpenAI should be in the middle of it rather than just one of the others, right? Because doesn't it seem like it's sort of the center of the web in some ways?
So I think that's the important thing that's taking place right now. In the last few weeks, we've seen 2, I think, big changes in what's sort of the pacing of things. The first is Oracle is now taking on debt to fuel its growth. And if you look at sort of historical bubbles, once you enter the companies taking on debt phase, that accelerates things. Debt is great on the way up. It juices things, but it's an amplifier. So it's good on the way up, and it's It makes things extra painful on the way down. The other big shift is that OpenAI has been, like you said, in the middle of lots of deal making, and it's an interesting company. It doesn't make a profit. It doesn't have free cash flow. It actually has pretty serious negative free cash flow, and they are the most aggressive out there signing deals. Just in the last 2 weeks, they've talked about adding 16 gigawatts of capacity, which is just a staggering amount of compute. And there are a lot of legitimate questions about where they're going to get that money from and what it's going to take. But critically, I think all the other names on that list are watching what OpenAI is doing and are afraid of missing out. They don't want to lose to this startup, and so they're going to spend aggressively to keep up with that. And that's why I think this bubble will keep growing.
And as it keeps growing, I mean, in the past, when we've had bubbles, there's always sort of a precipitating event, even if it's a small one, that causes the house of cards to come down, to mix my metaphors. How could that possibly play out this time? What should investors be watching for?
So I think there's a lot of ways that it could fall. In particular, once you start adding debt, then you have timing becomes really important. And I don't think this is, I don't think any of the companies on the list other than OpenAI have problems with credit or making their debt payments. But there are lots of other entities sort of below them, right? You go first to the neoclouds, companies like CoreWeave and Nebius and Crusoe and Lambda. They're all taking on a fair amount of debt to finance this. And then beneath them, there's another layer of special purpose vehicles and smaller funds, smaller companies that are building all this. And it's not quite a house of cards, but we are dealing with smaller entities that don't have strong balance sheets, that don't have strong cash flow, and things. It's easy to see them getting tripped up and causing wider spreading problems.
Jay, just quickly, since we're in a rate cutting cycle, couldn't that extend this whole AI spending cycle too? Even if people are taking on debt, if they're taking on debt at a lower cost than they would have yesterday, maybe that helps. Absolutely. Rates coming down helps all this, and it will keep going. I certainly wouldn't be short too many of the stocks in this sector. Even Nvidia, which I have a sell on, I think of that more as an underperform than a sell. I'm not telling anyone to short Nvidia today, but I think it's important to just be very sober and go into any trades with your eyes wide open about what the risks are. Again, people can make a lot of money in a bubble. Just be careful of how levered you get and timing and things. So you put in this note what you call Jay's slightly unhinged list of AI companies, because it's a long list, right? And it kind of like, it's not just those 6, it's all of those different layers that you talked about, the neoclouds, the service providers, networking companies, for example. So just to make it a little more succinct, like what do you think, if you don't think Nvidia, you think Nvidia is not going to relatively perform versus the others, where do you think there are those opportunities?
I think the big opportunities right now are in 3 areas. One is the neoclouds. CoreWeave, Nebius are both public. Some of the others may come public later next year. They still have a lot of potential deals that they could bring in, and the market likes those. I like the storage names, Seagate, Western Digital, SanDisk, NetApp, companies that we haven't talked about in a long time. But you look at some of these generative video apps like Sora. You're going to need a lot of storage to hold on to all of those. And then the networking names, CoreWeave, Nvidia and Broadcom are the biggest networking chip names out there, but there are lots of others, Credo, Astera Labs, AIP. There's a whole bunch of interesting names on this list that I think will participate in one way or another in the network build out.
There's a lot of things, a lot of ideas that people can invest in right now. Jay, thank you so much for joining us. Appreciate it.
Thank you.
Stick around. Much more Asking for a Trend still to come. Earth imaging and data company Planet is taking satellite imaging to the next level. Company announcing plans to launch a new owl constellation capable of delivering AI-analyzed images within an hour. And they're powered by Nvidia chips. For more, we're bringing in now Planet co-founder and CEO Will Marshall. Will, it is good to see you. So let's start with this news. You're launching this constellation of satellites, Will, called OWL. Help us understand, Will, what these satellites do, what's special about them, and what do you think the competitive advantage you have is in the market with these satellites?
Well, great question. So at Planet, we have the largest Earth imaging satellite fleet ever in human history. And we use AI on top of that to do processing. And that enables us to answer questions about the planet for all sorts of customers around the world. And we have the most data of any satellite company. And that is really useful for training AI on what's going on around the planet. What we're doing with OWL is a totally new and unprecedented capability. We are going to be scanning the whole Earth landmass every day at 1 meter resolution, so much finer detail, and get the data back within 1 hour with that processing on the edge that you mentioned, the Nvidia processor chips on board, so that we can do AI processing upstairs. That means do those image processing and send down the location of ships, or help us to do disaster response after a flood or earthquake or a fire really fast to help real people on the ground.
So if OWL will promises this sort of higher resolution, AI analyzed images all within an hour, I'm curious, what are the kinds of companies, Will? What are the kinds of sectors that you think would be most interested in this data? You know, is it energy, Will? Is it agriculture? Is it defense?
I think the particular kind of use cases that come to my mind are those that involve things like disaster response, where they need quick timeliness. So imagine after a fire, how do you get data on where is which buildings are affected? How do we get that as quickly as possible to the first responders so they can get there on time? Or security, where if there's events, you want to know as quickly as possible if there's a new threat around the corner, on the horizon. And so it's those kind of applications. And this is why, by the way, we call them owls, because they are smarter and they're sharper. So they got big eyes, they're wise. That's why we call them owls.
Does OWL replace your existing satellites, Will, or no, you think of OWL as supplementing them?
It's an upgrade. So it will actually be backwards compatible with our present fleet, but it will be just enhanced resolution and faster timeline.
So you have these space services deals, Will, whereas I understand it, correct me if I'm wrong, you might have a customer like Japan and you'll build and service satellites for Japan, but when the satellites aren't over Japan, you'll sell that excess capacity to other customers, which sounds potentially pretty lucrative. Will OWL be used for that as well?
You understood it perfectly well. So the partnerships that we did with Japan and now in collaboration with Germany are enabling us to build, launch, and operate satellites for countries that want dedicated satellites in their area. But then, as you say, so the Japan deal is just over $200 million, the same with our partnership with Germany for a set of 10 satellites and 7. And what these can do is enable those countries to have dedicated capacity in their area. But what we can then do beyond that is sell the data in the rest of the world. So this is good for us because it helps pay for our capex. It's good for them, they get sovereign eyes, and it's good for the rest of the world, because all the rest of our customers, because they get more capacity, more revisit rates. So and eventually it's possible that our OWL fleet could go into that as well, but that's a non-tasking system. So really, I think the primary use case for sovereign systems is a tasking system to help countries have specific eyes where they need it.
I would imagine, Will, that investing in and building these new satellites, that's going to require some capital. For your investors who are listening right now, well, how should they think about what this means for your financials, for your bottom line?
Well, a good question. I mean, there is capex, obviously, of building and launching satellites, but let me put it in perspective. All of our satellites combined that we've ever launched, which is over 650 to date, we launch about 4 times a year. We've extremely prolific on building and launching satellites. All 650 have cost less than the single last satellite before Planet started from our competitor. So one satellite, all 650 cost less than one satellite. So we are seeing more than 100x decrease in cost, or increase, as we put it, in cost performance of satellites. That means we're stuffing more capability, more compute, as we said with Nvidia, more processors, better sensor systems, better radios, and so on, into the smaller package so that we can do more with less.
Finally, Will, you do have competition. You think of names like Maxar, for example. I'm curious what you think makes you all different. What sets you apart, Will? Is it the tech? Is it just the sheer size of the satellite constellation? What is it?
Well, the first thing is the size of the fleet. So we have around 200 satellites in space. That's more than 10 times larger than any other Earth imaging company in the West. Secondly, it's AI, because we're the only ones that do a daily scan of the entire Earth's landmass. No one else does that. And with that, it unlocks huge applications across agriculture, forestry, finance, insurance, sustainability, security. And it opens up the relevance of space to AI, because everyone knows what's going on with the space revolution, cheaper rockets, but then the increased cost performance of satellites has gone up about 100 or 1,000x over the last 10 years. And the upshot of all that is more data. And this is where it merges with AI, because AI is only as good as the training data you train it upon. Now, all these AI models are basically trained on the text of the internet. But just imagine the power of being able to answer questions, not just of the text of the internet, but of the real world. Imagine being able to ask questions about the farmer's field next to your farmer's field. Imagine being able to ask about disaster response. Imagine being able to ask real world questions. The power of that is what the next generation of AI models are going to be able to do in combination with our data set. And Planet is uniquely set up for that opportunity.
Will, great to see you. Great to have you on the show. Thank you.
Likewise. Thanks for having us.
That's a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet.